Hello, everybody. Welcome to another episode of Finance Junkies. I've got my little headset here, in which I will be.
So hold on. Before you
crank it up, I don't even hear him. Like,
no, I'll tell you. So basically, Amit had put all Odia's money into SVB. So he lost his job. He lost all his money. So now he has to part-time in a call center. So we call T-Mobile or Verizon anytime the next couple of weeks. We might get Amit. You know, he used to drink real drinks. Now he's drinking Gatorade at home. Good for you, Amit.
Okay, so first of all, we're going to test the audience right now. Do you like this audio, the way I'm talking right now, or do you like this audio? Which one's better?
I mean,
of course,
that's ridiculous. What a ridiculous question.
Better?
Yeah.
Guys, do you like money or do you hate money?
Okay, I'm gonna keep this one, but I'm still gonna wear the headphones just because
it looks cool. Yeah,
Jason's team told me to order this, Chris. They sent an email saying order this for the pitch, and that's why I ordered it. So I'm like, all right, I'm gonna wear this one.
Yeah. You do whatever Jason Calacanis.
He says jump, I jump. So
But let's talk about what kind of an a-hole he is pushing his narrative that America's like.
Well, no, I think let's ease into this topic. Silicon Valley Bank is saved because single-handedly Jason Calacanis through caps lock forced Janet Yellen to save this damn bank. All right, so
that's not why. No.
Can someone explain how this is not a bailout? What actually happened? Why is everything okay? Of
course, it's a bailout, and it's going to continue to be a bailout forever because the system is based on fiat money. And we have a belief in the banking system.
Okay, so Vitaly, can you summarize what has happened in the past couple of hours for those that don't know?
I'm not going to summarize a couple of hours. I'm going to summarize the last 200 years of banking.
Go ahead. Okay? You got it. Monologue. You got it. Oh, wait a second. Wait a second.
All right. Lower the volume a little. Y'all kind of loud, man.
All right. Let me bring this down.
Also, someone's Discord going off in the back.
Yeah. It's you. Amit, you're the loud one. Yeah.
It's me.
Okay. You're perfect.
Let me reduce the gain. Okay.
Look, you guys know that the actual banking system.
Wait, hold on. We haven't done Finance Junkies on my channel in like 3 weeks. So gotta celebrate. Finance Junkies, baby.
No.
That makes no sense. That makes no sense for this, by the way. It's not the cowbell. It's not even the morning. So it makes no sense.
All right, go ahead. Tell us what happened, Vitaly, over the past.
No. I'm not. Maybe Chris can talk more directly about what's actually happening with this current situation. I'm just talking about the way the banking system works is with fiat money system, is that we have a system based on debt. Okay, the way it's created is artificial. Every time you put in $1 into the bank, they're allowed to lend out more money than they have. I don't know that you guys heard that, right? They create money when you put money into the banking system. Fiat money, that's the way it works. So when everybody thinks they're insured for $250,000, they go to the bank, they think they're actually covered. But what if there's a bank run on everything? Do you think there's an FDIC that can cover all of this? No. So the belief system is very important to the actual government and the Fed itself. That means they will do anything to make sure you always believe that they are covered because they are actually not, and it's all fake. It's fake money. It's not real. As long as you understand that, they will always bail out all the banks all the time.
But
because
they're not willing. They're
not willing to give up the whole system.
Taxpayers aren't doing this. Taxpayers aren't paying for this. That's what's been said.
That's bullshit. Taxpayers will always pay for this, Jen. That's impossible. I mean, maybe Chris knows exactly directly what the last message was that they mentioned, but of course, taxpayers are going to pay for this.
Okay, so technically speaking, it's not a bailout because there's two big differences between bailouts and not. Bailouts means that you bail out the parties responsible, right? In this case, it would be the executives and the bondholders and the shareholders. That's not happening. The bondholders, shareholders, they're not going to get any money. They lost their jobs. They're out of a job. They're gone, right? That's one of the major differences between today and 2008. In 2008, the bailout was, okay, yeah, we'll give you money and we'll let you keep operating as a business. That's why Goldman Sachs is still around. That's why all these other companies are still around right now. This time around, they let two of the banks go into closure and said, okay, we are going to work to liquidate the assets that they have, but we're going to do it in a pace that doesn't see the value of the assets devalue like crazy. And then you have all these market losses that you have to take. So essentially the Fed backstopped everything to protect depositors, right? So right now, I know a lot of people
to protect themselves. I want to make that clear because the whole system is dependent on us believing that our money is safe. The whole thing.
That is kind of true. You're absolutely right. But the major difference is that this is just how economics works, right? Everyone has to buy stuff, everyone has to get services, and it's not like you can be cash transactional with it every single time for every single thing, right? You can't just say, well, you know what, from now on every house that gets bought has to be bought in cash. Every single car has to be bought in cash. Every time you go to the bank, you have to take out physical notes and then transact them. So it's just not plausible to do that. We're not back in like the medieval times where this was a thing. And this has been around since like the first. Okay, so this all started not with the United States and everything else. This actually started way before then, during the times of like paper notes. Like originally,
England with central banks, and America was against central banks in the beginning until it happened, of course. And they got, anyone who hasn't read this, by the way, the Creature of Jekyll Island. I'm sorry, I must have. The Creature of Jekyll Island. If you read that book, you'll see that this central banking system that we have now in the 1930s, whenever it happened, was a total farce. They passed it at some convoluting the situation and making people believe that it wasn't a central bank, scaring people basically, and the senators. Yeah, it was sort of done in the back doors of government.
Well, I mean, who's responsible for the federal bank right now, like Federal Reserve? That was Alexander Hamilton, right? Economic theory in the United States was Alexander Hamilton back when we first got independence. But the point is that this is not something unusual that's only to the United States. Now, the problem with us in the United States is that because we're the reserve world currency, there's certain responsibilities that we have that other countries don't. Other countries are banana republics. They can fail at whim. No one will give a shit. Whereas the U.S., the consequences of the U.S. failing, the banking system failing, has ripple effects all across the world. So when you're in reserve status, you have to be very careful with how you manage money and put it from one place to another. I'll say this. I've been tracking this for the last week. Like, it started on Thursday. The one that I was worried about the most was FRC, because they had a lot of real estate loans on their balance sheet and they only had $4 billion in cash, right? And that was the problem. The other thing is that the money that they had, like on their balance sheet, quote unquote, that people had lent them, was zero bearing interest. Imagine $60 billion of money that's sitting in people's accounts at that bank and literally are getting no interest at all, whereas they could take that money, put it into some treasuries, or put it anywhere else and get 4%, 5%, 6% interest. The money that they had with the loans that they lent out to people were in like the 2.5, 2.7, and 3%. So it made no sense whatsoever for them. Like, how the hell? So most of the time what happens is, and this is where you need good risk managers, when you're lending out the money, like let's say at 3%, that's fine. You can do that. Most banks actually did that. That's why we all had mortgages at 2.75 and 3%. But the difference is they would hedge their interest rate position so that if interest rates were to climb up faster, right, what happens is you have something called a swap, which means that you don't have to pay that higher interest. That other entity would take on that risk. The problem here is that SVB didn't do that. Neither did First Republic. Essentially, they were unhedged on their position. So basically, they lent out money at 3%, saying, "Well, you know what? Inflation never really happens." Because remember, this is like 2001, 2002, and we don't need hedges, because guess what hedges will do? They'll cut into your profit margin, because no one's going to give you a hedge for free. They're going to charge you a premium, right? So it would have ate into their profits. So in order to keep their profits high, what did they do? They didn't buy insurance on the stuff that they were putting out.
They didn't buy those puts.
That's right. They didn't buy those puts.
Wait. But so Chris, basically all the alarms you were screaming on SoFi Weekly, you were dead wrong about everything, basically.
No, I was actually right.
Because the Fed bailed him out, right?
No. I said that they were in a bad position, and especially equity holders in First Republic and a lot of these banks, they're fucked. Like, think about it right now. The Fed is not giving these people loans to backstop them for free. Okay, that's the mistake. I think a lot of people think, oh, well, you know what? It's free money.
These are smaller banks. That's why they're not doing that part of it.
Yeah.
But my point still applies, that they can't let the system, anyone even think that the system is in crisis. They can't even let them think that, first of all.
Yeah.
But if this was a JPM problem, this would be solved in 10 seconds. Well, there would be no JPM problem.
Well, it wouldn't be a problem because there are guardrails for JPM, because JPM is such a large bank, right?
We saw 2008 that a lot of these big banks did not do what you just said. And they were also going to go underwater if it wasn't for the massive bailout that happened then.
Right.
So,
right. Well, no, those are investment banks. Remember, JP Morgan was not at risk even in 2008. It was the investment banks like Lehman Brothers and all of them. They were the ones.
As soon as they let Lehman, that was probably a mistake too, by the way.
Yeah.
Because that caused the cascade.
Remember, the first one was Bear Stearns, right? Bear Stearns was the first one to have all sorts of leaks happen. And so they let JP Morgan acquire Bear Stearns, but they essentially gave JP Morgan free money to do it. So essentially they let JP Morgan get.
And Wells Fargo, Wachovia was bought out, if you remember, by Wells Fargo. There was a lot of things like that happening, to prevent exactly this, a catastrophe. So I never even worried about this. This was a problem on YouTube, and you guys have been covering it like crazy, but this is not something I worry about. The United States will protect banks. That is not something I worry about. And in fact, by the way, I think some comments are probably thinking this is a bad thing. I think this is why America is strong. I think that's inflation is a good thing for our assets, and that house prices and our assets going up, we need the Fed to keep printing at some level, obviously not crazy, but at some level. So I actually think these are good things that are happening, not bad things.
So inflation isn't a bad thing as long as it's a measured amount of inflation that happens. Like that's the mistake. Right. That's what a lot of people think, like, oh, inflation should never happen. Like you should all have 0% inflation.
Right.
Like,
we should all have gold, right? In our stockings or something.
That should never happen. Like you should have inflation at between like 2% and 3%. That's what's normal. The problem is once it starts to go way beyond normal, I'm talking about not like, oh yeah, it went to 3% one year and then it went to 4%. No, I'm talking about, dude, we had double-digit inflation for part of the year last year. And that's where the Fed has to really get involved, because at that point, if it becomes something that's sticky, that gets set in the minds of people that, hey, next year is going to be another year where everything is 10% higher, I should spend all my money now, that causes inflation to go even more. And then guess what? Next year comes and then same thing. So you need to tame inflation as quickly as possible. Otherwise, it's going to devalue a lot of what you have. And so even though your assets may be going up in value, the problem is if that same dollar is able to buy a lot less, then there's really no point. So you can say, well, yeah.
The thing is, since in the inception of fiat money, the whole point of it is to go down in value. Okay, so let's not fool ourselves that if you're keeping dollars for 20 years in your bank account and you're not investing it somehow, you don't understand how this world works. Okay.
Yeah.
And so hopefully anyone listening to this is not doing that. You have to invest your money in assets that are grow faster than inflation. And real estate is a great thing that keeps up with inflation, grows faster.
And that's how you build wealth. That's how you build wealth.
Exactly. Yeah. So, but this is something that's good for people who understand this and bad for people who don't, who are keeping their assets in savings accounts earning 0.5%. They don't get it. Do you know what I'm saying? So
real estate over a long period of time has beaten inflation. That's one of the key things about inflation. That's awesome. The difference is that there are times where, and especially 2008, where the rate of appreciation on housing and real estate went up too fast and too much to the point where things got too fast. Like what we're seeing right now in the housing market is the same thing. Right now we're seeing double-digit return, like growth in housing over the last 2.5, 3 years, because a lot of it is just assets that were inflated by the Fed lowering interest rates so much. So a person who had bought a house for $400,000, their house is now worth $600,000, right? Which is crazy because that's a 50% gain in less than a year.
It's
almost
too much.
2 years.
I agree, but I like the people everyone expects to crash. Like me, Kevin, or whoever. I don't think there's a crash coming in real estate. We're not in the same problem as 2008. And the government just showed we're not going to let that happen. We're not in that same situation. Okay.
Hold on.
And the people taking loans out right now can actually afford them, by the way. There's a big difference between 2008 and 2009. The free money is different it's for the rich. Okay. Let's not fool ourselves.
So Chris, you think the government did the right thing with today's decision?
I think your mic is low or off. I'm not sure which one it is.
You think they did the right thing? Right?
Yeah, absolutely. They had to do it. No matter how much I can cry about moral hazard, because moral hazard is definitely a real thing where, you know what, if you bail everyone out all the time, it ends up being that it's now an expected thing. So now the next level of people are going to take risks again because they're like, well, the Fed's always going to be there to bail us out. Yes, there's moral hazard, but unfortunately, this is not one of those things where you can say, well, you know what, we need to crash the economy to teach the libs a lesson.
The other situation is completely, listen, we would all suffer way more than the bankers. So the other situation is so much worse.
Yeah.
We don't want that.
Exactly. So I just want to touch on real estate one thing, and that's I don't think that we're going to have like a 2008 style crash. I do think that we're going to see some reductions in pricing, but not a crash. And I do think that for the next 5, 6, maybe even 10 years, real estate will underperform the market overall, but
I think you're
it'll
wrong.
be good. Let's see, because
you know why you're wrong?
why?
There's only one reason. It's supply and demand. They're not making enough real estate. They're not actually building enough things. And there's too many laws against building. Look what's going on with California. Even with the problems they're having, they still will not build enough real estate. It's kind of crazy.
Yeah.
And at least around New York, New Jersey, and I've been in this market for a long time investing, the only place this place goes is up. I've never seen it. It went down for a minute in 2008, and you better have scooped up something because that was gone. So I think the same things are happening, that you better scoop up things if you see any hit like 20% off or anything like that.
I think there's some changes, demographic changes that may end up throwing some water on that theory.
Fuddbucker says it's wrong. What's wrong, Fuddbucker? The fact that he makes me say that.
Well, here's a couple of scenarios that I hope people keep in mind. Number one, family sizes are shrinking, right? People there's no real big families anymore. Most people are actually staying single for a longer period of time. There's a lot more
you met the
baby
Jews,
boomers. There's a lot more baby boomers retiring now, so a lot of them are downsizing on their house. I mean, a lot of them are probably staying in their nest right now, right?
What is your response to what are both your takes on this? I think this has to deal with the real estate stuff as well.
What's your take on the highest credit score consumer default doubling on auto loans?
Well,
yeah, I mean, go ahead.
Auto loans are different. Well, you can continue this, but auto loans are different than we're talking about houses. The people buying houses now, and I buy houses. I know who I'm competing against. These people are paying cash in a lot of situations, okay? And in good areas. I'm not just talking about the middle of the country. I'm talking about New Jersey, New York. They're paying cash for high quality real estate, and it's hard to compete with them. Or they're putting down 25, 35, 45% down. I've never seen this. Like 2008, you could have put down 5%. It wouldn't matter, right? I remember that. Now, forget it. You're actually competing with people who have money. So, but the auto loan thing is different. The auto loans were given to everybody. There was anyone could have that. It's different for the houses. I don't think we're in the same situation here. I think,
but if mortgages are 7%, I don't get why you guys are saying there's not going to be some level of a crash in order to get those.
There's going to be a scaling back, but everybody's smart enough to realize this is temporary. Who's buying property? And if they're paying a lot of money down, first of all, the percent is not. If you're already rich, the percent is not hurting you enough. And the way I do it, first of all, when I buy property, I've bought at 7.5%, 8.5%, 9.5%. I've done this already. What happens is during the bad time, the high interest rate, you buy the house, you do the 30%. During the good time, you refinance and you get all your money out. So 2-3 years from now, all those people who put down their 30-40% will be refinancing, going to the next deal at the 4% level. That's exactly what they're going to do. If you can afford it, that's what you do. And that's my plan moving forward, obviously.
I mean, I think you're definitely right on that, but I do think it's a lot more regional. The things that I've been seeing that worry me the most is that there's 3 main factors that have driven real estate prices much higher than what normally we would have seen. Number one, you've had a lot of people, Wall Street investors in 2008, 9, 10, 11, 12, they got into the market and they bought up a shit ton of single family rental houses and turned them into rentals. So a lot of that inventory was taken out of the hands of the regular consumer, right? When you have Wall Street basically have free money at their disposal, because that's what happened, they ended up buying a lot of these houses. So if you go to certain parts of the country, it's almost like 50, 60, 70% renting that's happening, right? Instead of families buying homes. So that's number one, right? Number two, what happened is because COVID happened, a lot of people that were in the cities moved out to the suburbs and everything else. They started up buying a lot of houses and everything else. So that jacked up prices. And guess what? People also started making more money too. Don't forget that. People were making, think about the last 2 years. People started making really a lot of money. So they piled it into real estate. And there's been a lot of culture that's going even among consumers to go and do the Burr method. I don't know if you know, like yes, TikTok investors. And yes, those are the people that are probably in the worst shape because they essentially are like promoting this like as a viable business, right? That, this is what you need to do. You need to just
it is viable, by the way. It is viable. It's not viable for people who don't know what they're doing. That's different.
Yeah, okay. Right. And last but not least, Airbnb. Like, imagine how much of the housing stock right now is being utilized for short-term rentals, whereas 10 years ago, 20 years ago, that was not a thing, right? Where you couldn't go and buy a house and turn it into a hotel room. Well, essentially, that's what's happening. So
to your point, I just want to add to this because they're competing now. Me as a buyer is competing against people who are willing to do Airbnb for their houses, people who are like BlackRock, who are buying a property, corporations now. Look, we know Zillow's out of the game, but Open Door is still around, still buying houses. They're not dead yet. So the competition now for property is much bigger. So anyone expecting a massive crash, why are you going to get it? Because the competition is 4x since 10 years, basically.
Now, I don't know if you know about this one company that Jeff Bezos started not too long ago. It's called Arrival Homes. Do you know what that is?
Fuddbucker says there's no housing shortage, which is not true. I'm actually in the real estate game, and there's a massive housing shortage.
I think there's a housing shortage. I'm actually in Fuddbucker's side. I think a lot of it is just vacant inventory that's sitting on the sidelines waiting for people to let it appreciate so they could.
Well, yeah, but hold on. If they're doing that, and that does happen, I actually know a lot of Hasidic Jews in New Jersey who do that, who hold the houses and do nothing but hold them, don't rent them. But that's different. That's their plan. So they don't expect to rent it to anybody.
But that made sense when inflation was and interest rates were 1, 2, 3, 4, 5%. Right now, if you could take that same money and put it into a treasury and get 5, 6, 7% tax free without any sort of issues, that's in my mind as an investor. Most of the cap rates that you're looking at when people were buying these homes, the cap rates were like they were making between 6 and 7% a year.
Yeah.
If you could, but here's the thing, you're taking risk while doing that, right? Whereas now you can just put your money in a treasury and it's risk free.
That you're doing. See, right? I feel like you don't know actually about this, and I do. It depends what area.
Wait, hold on. Did you just call Chris a fucking idiot?
No, I'm saying I've been doing real estate legitimately, meaning buying, flipping, selling, keeping, renting, all of this stuff. I know you own a couple of properties, but I've actually done this.
So did you just call him a fucking idiot?
No, I'm saying he doesn't know this part of it.
I'm just kidding.
He's hearing the speak on CNBC that 6-7% cap rates, and these are true. There's a lot of houses that do give you that. Whenever I do a deal, I get over 10% minimum. A lot of times it's 20%. Okay. So it really depends on the deal you do, how you do it, how you repair it, how you fix it, how you rent it out. There's a lot of variables there. This is why real estate can make you super rich, because those variables exist. The people who don't know it take the 6-7%, get a management company, and that's it. And then you're stuck. Or you can take a hands-on approach and make over 12 easy. So it really depends. I'm gonna meet Kevin. Yep.
I think Chris is right on this one. 7% sounds like too much to me.
That's not how it works. He's talking about if you take a hands-off approach or you do REITs. Yeah, that's what you're getting. You're right. If you're a hands-on operator, which I am, it's over 10% easy, and usually it's 15 plus.
I think we are definitely going to start to see some issues with cap rates and everything else, where a lot of these investors are going to be in a position where now they have to borrow money. Because remember, everyone that bought these houses, they didn't just buy them with low interest rates. And most of them were actually floating rate. So that means that when their interest rates actually rise, it's too much.
That's not nice that you put that up.
This was the best one.
24, 36, 15, 11, 5.
See,
4.
it's actually funny because you're making money, so all of us are laughing, calling you dumb, but like you're the one actually.
Hey, listen, the rent checks keep coming in, so you guys can laugh all day you want.
Yeah.
You know?
Well, see, that's the other issue too, Vitaly, right? That if the economy goes bad, it goes sour, those rent checks, if they start to bounce, they still don't start coming in again, and you have to deal with the fallout of that. Not a lot of these the Wall Street renters will probably make it somehow, but the ones that are like the Burr method ones, the ones that are just like novice people that got into the market, they're the ones that are going to take the bath,
Look, I've actually had people who followed me the way I started doing real estate even 20 years ago. I've had like family follow me into my method, but they didn't do what I did because they weren't willing to, because it's a lot of work. I'm not saying this is easy.
I feel like you're calling your family stupid.
No. I've had actual family who tried to follow me, and stop saying that. And they weren't willing to do the actual work that is required. And I can go into in my 10-point course. I have a course coming out in a week.
I've seen it. I got the preview. It's going to be $9.99. It's not too bad.
$999.
$999, not
$9.99. $10.
Okay, so hold on. So let me say. So first of all, we have 285 people in the chat. Thank you all for being here. This is the first time we had highest we got was 170 on Finance Junkies. So every Sunday, if this is a good time, 9 p.m., let us know.
Yo, YL says I'm bullshitting, apparently. Okay. I don't really care. That's fine, YL.
So and, we need...
ZOH cold, you're right, exactly. When the economy goes down, that's when you actually make the most amount of money. That's absolutely true.
That's true. Okay, so 287 people are here. Thank you for being here. I want to switch the topic, but please put in the comments anything you want us to talk about, something that's really interesting that you want to get our take on. We'll talk about it. Now, let me pose a new question. Do we think Elon Musk could have bought Silicon Valley Bank out?
No.
Could that have ever happened?
What's the point of that?
No? There was no chance of that happening at all?
No. He's already leveraged like crazy just to get Twitter, man. No, it wouldn't make sense. Yeah.
That's not even... Is that something he mentioned? Was that a tweet?
He responded.
He said
to a
it,
tweet,
but he said it in he was a comic about it.
I think he was joking about it, that he's something else he's going to buy. That's probably...
Yeah.
Okay, so ultimately we agree then that the Fed made the right decision. There's not going to be a contagion, and likely the economy is saved from disaster.
Whoa. Okay, so yes, I don't think that there's going to be a single event that crashes the entire economy, but I saw a lot of people like, oh my God, I'm going to go start buying a lot of these regional banks again because now the Fed is bailing out. No, the equity holders are not in a good place. They are going to have to borrow money, high interest money from the Fed just to keep themselves solvent. And the entire time they're going to be bleeding cash.
What do you mean by the equity holders are not in a good spot? What do you mean by that?
So when you have...
But before you answer, I just have one thing to say.
Mm-hmm.
The sexiest guy in America is here.
Yo. Antonio Banderas just joined us.
Okay, Chris, go ahead. Finish.
Yeah.
So what do you mean by equity holders?
Okay, so equity holders, when you have a bank, right? You have shareholders, right? Banks have shareholders. They have bondholders. They have preferred shareholders, right? These are the people that capitalize the bank initially and then trade it away and all this other stuff. So it's like any other company. So they're the equity holders in all of this. They own the bank. What the Fed did was say, look, we will backstop and make sure all the depositors are covered, right? But we are not going to just give you this money for free. You are going to give us money return. You're going to give us interest in return. Now, what are the interest rates that they're charging? 5%. Sometimes, I don't know, like if it's going to be higher because the Fed is going to be raising rates going into the rest of this year. So it's going to be about 5%. Now, here's the thing. The assets that they have, they're only yielding sometimes 2 on the treasury, sometimes 3, because they bought these things way back in 2001 and 2002 when inflation was low and interest rates were low. So imagine right now, Amit, I lent you money to buy your house, a $500,000 loan, and I'm only charging you 3%, and you're only obligated to pay me 3% every year for the next 30 years, right? I now have to go and borrow money at 5%, right? To basically fund my operations and do all this other stuff and to actually hold that loan. Now, here's the thing. That means I'm bleeding 200 basis points every year just to fucking pay, just to make sure that I have that money. Because I have to borrow money at 5 and I've already lent it out at 3. Before it was okay because they had gotten all that money from regular people, depositors, for literally next to nothing, for 0%.
So that's why you're saying equity holders are going to sell their shares then, basically.
If they're smart, they'll sell that shit ASAP, but who knows? You know.
Okay.
But it gives them the ability, once again, it's sort of a mini bailout for all the investors and shareholders, because now they have a chance to actually do that instead of go straight to bankruptcy and try to get whatever they can out of that. Because now the bank continues to sort of, right? It's not just closing down. Is that correct? Is that what you're saying?
Well, it's
Chris?
It's no, say that again. I'm sorry.
Is the bank actually closing down or is it continuing operation?
Well, it depends on which bank, right? Right now, the two that Silicon are completely closed, Silicon Valley is closed. Like they're done. Okay. They're done, right? Signature Bank, they're done. Like their branches are not going to be honoring new deposits and all that stuff. The FDIC is taking control and said, look, our job now is to just basically make sure that all the depositors get their money. That's it. I'm talking about the other regional banks that are super leveraged right now that don't have any hedges. So an example is FRC or First Republic. So a lot of people, they have their money in First Republic. They're not getting any interest on it, right? It's just sitting there almost like for free for them. If they get hit by withdrawals tomorrow, First Republic only has $4 billion in cash, okay? They owe people almost $100 billion, right? And they only have $4 billion in cash liquid. The rest of it, they actually lent out to people, right? To buy mortgages and buy real estate and everything else. Right. So the thing is, if you have a bank run and let's say it goes above the $4 billion mark, which is likely to happen, What ends up happening now is that they would have to liquidate those assets. They would have to liquidate those loans that they have. Now, here's the thing. When you go into the market, people are not going to give you par value. People are going to say, no, I'll give you 80 cents on the dollar for those assets. So the federal government said, look, don't go out into the market and give them to other people and take a huge loss. Give them to us. We'll hold on to them, right? We'll give you cash so that you can give it to your depositors, but we will charge you 5% on that money that we're going to lend out to you. So
what do you think about Signature Bank closing down as well? Is that one of many regional banks that will get closed?
Yeah, that one it's closed already. That's not even they were too far gone. There was a couple that were so far gone that it was like, look, there's no point for us to even try to save it. I don't know if First Republic is going to be saved. There could be some other banks in the next couple of weeks that we see that they have too much leverage on their books and they just end up closing down. But their equity holders are the ones that are going to have to face the consequences of this, and maybe even their bond holders. If you look at First Republic Bank's bonds right now, they're trading at 60 cents on the dollar. So tomorrow you're going to see a bloodbath. Well, at least I expect to see a bloodbath in their equities. So their share price are going to go
down.
No response.
No. Annoying. So I don't know. Carlos, you want to get your take in on everything that's up with it over the weekend? Any core thoughts on it?
I haven't honestly. I haven't read up too much. I mean, I know obviously that the banks went under, but I haven't read too much of the details. I was like doing family stuff this weekend.
Okay, it's your you have a birthday today, right? Kid's birthday?
Daughter's, yeah, kid turned 2.
Okay, very cool.
That was fun. Yes, I went from a room of adults screaming. I figured come hear some more adults screaming.
Room of kids screaming to a room of kids screaming.
Someone said, how do you know FRC is unhedged? Look at their 10K. Read through their 10K. That's how you know.
Don't read it. It's boring.
I was like, did I say that? I was like, are you accused? Did I say that?
All right. Honestly, move on. The government.
Yeah. What can we talk about?
Once again, the government has saved us.
Well, I was thinking
that, I mean, everybody.
I was thinking that the other stocks, like Silicon Valley stocks, would all take a hit too. Because remember, my original tweet on Thursday, or was it Friday, was that a lot of these counterparties would take a hit. So think about it this way. All these venture capital companies, they had partnerships with Amazon, Google, Microsoft for Amazon's web services, for all this other stuff, right? If they didn't get paid, they would have to start cutting back on those services, which meant that we could have seen some EPS hits in the next year or two among the big tech companies. Well, now that the money's unfrozen and that those founders are going to be able to be solvent and have liquid, they're going to still be able to run their operations, which means that we are not necessarily going to see a downward move in a lot of the tech stocks that we typically talk about. You know, like the Amazons of the world and Googles of the world and Microsoft and Snowflake and everything else, who provide services to a lot of these smaller companies.
Yeah, let's talk about Bill Ackman being a total turd. How about that?
Yeah.
Well, Bill Ackman, I think his argument was valid, though. A lot of these people, Jason, their arguments about the Fed.
His argument's valid because he has a massive put on Friday to make bank, and now he's going to be totally screwed in the morning unless he gets out of it.
Wait, no, hold on. But this doesn't make sense. If he has a put, doesn't he want the Fed to not do anything? Wouldn't that be good for him?
Yeah, that's what I'm saying. He was shorting probably a lot of stuff.
But he said the Fed should step in, right? Or did he say they shouldn't step in?
Dude, he said the same thing when 2020 crashed and he was shorting the market and then went long after that minutes of going on TV.
That's true.
So
that's true.
You know.
Okay, so
what did you guys buy this week? Or did you guys already cover that?
How about Weight Watchers? I'm down on it, but I'm about Weight Watchers.
You see the
product or the stock?
The stock.
No, I'm not.
Believe it or not, I might need the product.
Legitimate question.
I might need the product a little bit, dude. I've gained weight over the last couple of years, man. So I definitely need the product too.
COVID pounds.
Jeez.
Yeah, exactly.
Okay, this is what I was. Go ahead, Vitaly.
No, the problem with Chris's investing strategy is like he's like one of those guys who just like goes fishing and just tries to catch anything. Do you know what I mean? Like he doesn't need a giant carp.
You don't even know why I'm investing in it. That's the thing.
No, I read your tweets. I read your tweets. Yeah. I like your tweets. Okay. They're very thoughtful, but I'm just saying, like, it's like you're just going randomly to looking at things that are no interest to almost anybody.
I have been very excited for this specific space, the GLP-1 space.
It's the
for a long
drugs, right?
time.
They bought a drug company.
They didn't buy the drug company. They bought a telehealth service that allows you to get those drugs. So obesity is a real problem among a lot of people. Like, and I work in healthcare. I can tell you the amount of money that gets spent every year on treating obesity related problems is crazy. So to get something that gives patients an option to actually works, that's a proven effective treatment, is crazy. And so Weight Watchers already has a captive audience that they can now monetize, which means that, and the other thing is operationally, they're doing okay. They're not like in a really bad place. They have a good amount of debt though. That's the only worrying thing. But from an intrinsic value standpoint, it was one of those throwaway bets for me where it's like, if it hits right, it'll 10x. And if it doesn't, I won't lose a lot, you know?
All right. What do you guys think about this headline? Saudi oil giant Aramco posts record $161 billion profit in 2022. Do we think that profit can sustain itself over the next 10 years?
Yeah, easily. The cost of production for them is like in the single dollar range, and no one in the rest of this world is investing in oil and natural gas upstream. Everyone is just like, well, you know what, EVs are coming. Well, 95% of the world right now is still running on oil and natural gas. So that means that your competition has basically put their hands up and says, we're not going to invest in the future. So now you almost have like a monopolistic approach to things. So now they can cartelize, like basically maintain that cartel presence and keep oil prices high. Like the last thing you want is more American oil drilling that comes and competes with you for price. So I think the Saudis are fine, you know, for 10 years at least. For 10 years at least.
Okay. I was thinking maybe we're going to have some disruption with all that profit because we're going to have cleaner forms of energy. But you're probably right. We're not going to get away from oil and gas for a long time. So, okay, this is a good question from Ryan. Does Weight Watchers have economies to scale? That's kind of I see what you did there. Ryan.
Yeah, no, it does. It does. A telehealth. Okay, imagine right now you have a telehealth service, right? A subscription-based telehealth service that you can talk to a doctor. The doctor can prescribe you weight loss medications. The weight loss medications, you take them, you get monitored, you get maintenance. The Weight Watchers part contributes to behavioral changes in your life that help you lose the weight. Like, there have been people that have lost 22% of their body weight. For someone that weighs like, let's say 250 pounds, you're looking at almost like 60, 70 pounds worth of weight loss in like 6 months from taking a once a week medication. It's GLP-1 medications are, I would highly recommend you guys look them up and see what the total market potential are for them and what the profitability is. Yeah.
No. I actually like that you can go outside of your circle of knowledge, because like I do take that Buffett advice that stick within what you understand, and I feel like I understand tech pretty well. So I'd rather invest in that, even if I could make a lot of money in Weight Watchers. I just don't get it enough. I don't follow it closely enough, so I wouldn't know.
I was just about to go ahead, Chris.
No, I said I'm in healthcare, so this is one of those things I see. My sister-in-law is an endocrinologist, so she's like I was talking to her about it this weekend. This. Yeah, and I was talking to her about it this weekend. They're like, dude, everyone that comes in is like, hey, we want Ozempic, we want Ozempic. So I see the demand just organically flowing like crazy. Anyone right now who has a high risk of obesity, well, is obese and has a high risk of mortality, they're being prescribed this stuff, right? It's not specifically geared toward obesity right now. It's mostly for diabetes drugs, but now the clinical indications have actually been proven, so they're probably going to keep going. So FDA approvals for the clinical indication of obesity are coming within the year or two for some of these other newer drugs that have been proven to be really effective. And like I said, it's one of those things that you should definitely research and just broaden your horizon on this specific topic, because this could be one of those real big generational money makers, you know.
Do you follow like the Cathie Wood stocks, like for Pac Bio and everything like that she's doing?
Yes.
I don't necessarily follow a lot of those, only because majority of those are in very, very speculative companies, right? Where they're relying on relying on single product or a single type of class of drugs to make them a ton of
Well,
money.
PacBio is actually doing sequencing. So a long string sequencing or whatever, short string sequencing is being done by, what's the big company that does that right now?
CRISPR, PacBio. There's a lot of companies.
Well, no, they're doing long sequencing. So that's what's different about PacBio. So I did only basic research on it, but that sounds like very promising. That actually sounds like a very promising tech, and she might be investing early, but that looks like that could be a massive company.
The one that I would probably look at if you had a chance is something called AbCellera. AbCellera is really good company. Like it's just came out within the last couple of years. It's got I could literally go on and on about AbCellera, so I'm not going to at this point because it'll bore the shit out of everyone. But yeah, there are definitely some good opportunities in the space right now for not just drug companies, but for a lot of companies that have been sold off that have a lot of market potential going to the future. You know, healthcare is always improving. Healthcare is always getting better, you know, and so there's definitely value there. Yeah.
This super chat by John. First of all, a Microsoft employee by completing their courses that was aimed at Chris. So thank you for that, John. That was from our SoFi Weekly. That was an inside joke. But I wanted to transition to this because we know that these two guys on the screen, they did a video this weekend.
Oh boy.
They did a video about our stock, Chris. Jem says, I was just watching Vitaly Carlos's video on Palantir. So I didn't get to finish it, but you want to give us a little the channels in the description.
Yeah, TLDR, don't buy it.
What was the summary of this 40-minute video you guys did? You dedicated 40 minutes of your life.
It was probably like 2 hours. We had to cut out a lot of like actual hate.
Actually, that if you look at that was, I think, what Vitaly and I talked about after our first or second Finance Junkies. It was like we stayed on the Zoom and we just kept talking, and then it ended up being a conversation about Palantir.
So at $7, you guys still don't
okay.
like
What's
Palantir.
funny? We talked about it in December 5th. That was the day.
Yeah,
$7.
What is it right now?
It's at $7.
It's at $7. And whoa, that's crazy because we were talking about a good strategy would be to tax loss harvest right at the end of the year and buy it back a month later.
Well, we said it probably won't change. There wasn't any pump there.
Yeah, but that's most stocks. That's not like you guys aren't psychic for that. That's pretty much every.
No, it wasn't about being psychic. It was because it had come down so much. We were saying if you did go in, say you put 20 grand in.
He actually said dollar cost average. If you listen to it, it's a bullish episode, but people are taking the negative.
It's bullish.
Carlos said
it didn't sound bullish in the first.
In the middle of it, Carlos is ready to buy. Okay.
No, it's not that I get ready to buy. It's just that it's. For me, before we talk about the fundamentals or the PE or the reasons to buy Palantir as an investment, I just think that it just needs to be said that it's basically a public intelligence arm of the CIA, and that's what you're investing in. And I just think that a lot of people buy into. Hold on. I just think a lot of people buy into a lot of the nonsense that Carp talks and these highfalutin ideas.
Carlos, that is a gross misexplanation of Palantir. With all the deals they've done in the private sector, to call them just a public arm of the CIA.
You can still have deals in the private sector. I'm just saying that at its core, that's what it is. That company can never go bankrupt. That company, no matter what happens.
That's a good thing. That's a good thing.
What I'm saying is that company will never go bankrupt. It is too valuable to the government to ever go bankrupt. Which leads to that doesn't incentivize the officials there to grow the company for shareholders.
My problem is
it's the too big to fail idea, right?
No, that makes no sense. Like nothing.
I'm not saying.
Dude, we're not here to debate you. We're here to be right.
I'm not saying.
You're saying the company has no incentive to grow because they know they can't fail.
No. Growing is different from giving value to shareholders. I don't think shareholders are going to realize good growth or good returns on their money.
Well, but their employees own a lot of their shares. They are shareholders as well, and those employees want to.
Those employees
overpaid employees.
Look, you could argue overpaid, but the point is, if that's the part of the deal, that's a risk that they're taking. And if it's a greater risk, they should get greater reward. I have no problem.
No, unfortunately, the problem is
small wallets, SoFi all day long.
When you have
Palantir.
When you have an operating structure in a company that's just there to reward employees so much that the shareholders don't get that return, that's not a good thing either. Like if you're paying employees $400,000, $500,000, that's great for the employees. I'm happy for them. But dude, me as a shareholder, what's going on? Like, I need to see some of
they're
those returns
they're diluting you. Did you see? If you look at the end of our video, we go through a list in the 2022. I think it was of the top 10 paid CEOs. Why is Alex Karp on a list of the top 10 paid CEOs when in the same conversation with Elon Musk and Tim Cook that provide real value and are profitable companies?
Well, Palantir's only been public for 2 years. I mean, Tesla's been public for 10 years, and then they turned to profit.
This is yearly salary.
You want to bring up our video? Show that
bring up our video. This is what they make per year.
Show how much money this guy Karp takes in while his company makes no money.
Net worth is 1.6 billion for a company that's 14 billion market cap, and they're not profitable. And you can look up Tim Cook's.
Well, they are profitable now. I don't know.
Gap profitability for 1 quarter is not.
And he's going to take that.
Okay, well, why don't you wait till it's a year of profitability?
A dollar is a dollar, Mike.
Okay, so wait for a year of profitability. Imagine I came back, guys. Today I made $1. Okay, tomorrow I lose 1,000. Like
if the dollar was on dividends, I'd be like respect, because you didn't do anything for it,
Yeah. So, if you want to hate on us in the comments, go to our video.
At least Elon Musk's salary is 10 billion.
First of all, Elon's salary is not 10 billion.
It's not 10 billion. That's what I'm saying. So, what is it? Net worth or?
I think they're talking about also stock-based compensation, and Elon did have a big compensation package, so that could be part of.
We just went to court over.
What's Tom Siebel's?
What's Tim Cook? Well, can you show the chart? Forget about playing it. Like we actually had the breakdown. I think you went. Elon Musk, Robert Scaringe, which is also ridiculous.
We're talking about it right there.
Apparently, Robert Scaringe makes more than Tim Cook in total compensation.
Yeah.
Which is the Rivian guy. Then we have, if you can go scroll down further down,
and then you'll see they break it down based on how much of that is salary, stock-based comp, and perks.
Oh, sorry, I was on mute. Karp's not getting $1 billion salary. That's his shares.
He's not getting He's not.
So then, what are you guys talking about?
He's getting $1 million salary. $1 million salary. Then he has
wait. So hold on. Why are you guys mad at Karp? Just like Elon has a $10 billion net worth from Tesla salary.
This is why you got to watch the video. If you're gonna try to come back at us, watch the video. So
watch the whole video, man.
It's a $1.6 billion net worth, and we're breaking down yearly salaries for the top.
Wait, hold on. A CEO can't have $1 billion net worth that's been there since 2004 that owns 6% of the company.
Okay. Watch the video. The company has not.
No. Hold on. This is not even
the company has not made. You're taking. Hold on. You're taking money.
This is such a bad argument.
No. I actually think Karp could be a billionaire.
Company, hold on. If I'm investing in a company and I'm expecting people to invest in my company and give me their money, that money should be returned to the shareholders before I go and start taking money.
But he hasn't sold a single share for profit. He sold 300,000 shares last week for taxes. So what are you talking about?
He hasn't sold a single share for profit. He just sold 300,000 shares for
taxes.
He follows how it connects logically.
There's no money in his bank account. There's no money in his bank account.
There's $0 in his bank account.
He's got nothing. He's got nothing.
Your issue is the CEO having $1 billion.
Karp lives in a room in a basement somewhere in the Palantir headquarters. Doesn't take showers, obviously, because his hair is always a mess. All right. Reads poetry downstairs in the basement.
I think you guys are too ideological.
But anyway, I don't care about the CI thing. Carlos has a different take on it. The reason I don't like them is because I feel Karp is a bad leader. I don't think he's understandable to the general public, general Wall Street. The second thing I don't like is I feel that they're a very niche product. I feel like, and I could be wrong eventually, maybe they will change. But right now, from what I gather, you need a bunch of engineers to go to a Fortune 500 company to build the systems they need to use Palantir software. I don't see the scaling part of it yet. When that changes, listen, I'll become a bull. I don't care. I'll make money on Karp. I'm making money on Zuckerberg here. I don't care if it's Karp, but I feel like they don't have a scalable business yet. And maybe the fact that they're not growing their revenues at 30% plus, like they said, that could be the issue that's showing itself right now. I think it's 20% right now, right? The growth. So
see, but that's a way better argument than Karp doesn't.
No, but that's my argument. As soon as that changes and the growth changes back to 30, 40, 50%, because I can invest in companies right now that are growing. Even SoFi is growing, what, 50%? What, 40%?
Roundabout, yeah.
So like I can invest in SoFi. Like, so I mean, what is the better case for Palantir? I feel like they're not hitting their metrics.
Well, SoFi's a bank and there's not that much upside to a bank.
I know you're giving me this bank thing, but I'm just saying if I had $1 to put somewhere where I think I'd make $2, that's the whole point. So at some point you don't have infinite money. I can't invest in I'm not Johnny Boy here in the comments who has infinite money and he's buying everything. I have to buy certain stocks that I think will do better than other stocks, right? That's why you buy them.
Okay, let's transition to Tesla. Are we buying the dip on Tesla? It's gone down to about 170, down from 200. What do we think about Tesla?
I feel like I bought almost way too much. I've been really I've been ever since Investor Day and seeing how the Wall Street did not get Investor Day. And now you're starting to see, even on mainstream media, you're starting to see bits and pieces of Investor Day as they're starting to connect the dots. And I feel like as long as Tesla executes and beats their numbers and gets Cybertruck out this year, I do think that just as much FUD as you saw for Tesla on the negative, I do think that this could be the year, or if not this year, next year, when the mainstream media gets behind Tesla again. You know, Elon was one of the most like loved CEOs at a certain point, and we kind of go through these love affairs with our billionaires, right? And then Elon has been the guy to shit on the last couple of years, but that could easily turn around.
I do think Elon's brought all this shit on himself. I mean, let's talk about this. And again, I love Elon as well. I'm a Tesla shareholder. He has explicitly decided to become a conservative on social media. I mean, like I know he says he's in the middle, but we can tell the guy.
Well, no. Hold on. I'm going to disagree with that.
I'm not saying that's bad, by the way. I'm just saying.
No, I'm not. No, I'm not saying it's bad.
It's the characterization.
This is the problem. So the goalposts have moved so far to the goddamn left that even having like one thing that you don't agree with makes you a conservative.
No. That's not what I'm saying. I'm not saying because he believes in free speech, he's a conservative.
And he's voting for Republicans.
I'm saying he's explicitly said he's voting for Republicans. He used to vote for Democrats, right? So that's like the obvious stuff. And then B, this whole MAGA stuff that's going on with this Jan 6 stuff, he's obviously leaning towards like freeing the guy out of jail for whatever reason. Now you can say that's right or that's wrong, but he has decided that this is the base he wants to cater to. Like, it seems very obvious. So all the trans stuff, which tends to be a left issue, he's kind of against pronouns. Like, he seems to be going a certain direction, and maybe that's going to be good for branding. But that's definitely brought a lot of shit on him, because now he's not seen as the technological futurist. He's seen as a MAGA dude, even if he's not
unfortunately, I think we're going to see a lot of people move towards that direction. People are really getting tired of having to placate the really far fringes of the left side, right? Like, if you don't believe in our ideology, you are automatically a racist. You're automatically a misogynist. You're automatically this. And a lot of people are waking up to that and saying, look, we're not going to, like, Bill Maher right now is being attacked. Like, Bill Maher is probably one of the most liberal people you could think about, and people are calling him a MAGA guy now.
I know, it's ridiculous.
Imagine that.
The whole thing's ridiculous.
That's true.
Because like what you said, the left has gone so far left that even now, if you were just even left of center or right of center, you're now the extreme right. I do think people are getting tired of it, and I think you got to believe Elon for what he says, that it's an issue by issue basis, and these happen to be like the main issues, or at least that are being debated on Twitter right now, and. Yeah. He's an issue-based guy. Like, he just disagrees with a certain position on an issue, and it just so happens that these are being roped in or painted by the extreme left as now you're a conservative. But I don't think that a lot of these ideas were conservative 10 years ago. You know.
So here's a question. All right, and this can get a little dicey, but it's worth pursuing. So. Someone said Chris is a confirmed Republican now, right in the comments, right? I would say that person. It depends. It depends on the issue. No, it depends on the issue. There are certain things that I'm a Republican on, and there are certain things that I lean heavy Democrat on, because I think the Democrats have it right. You don't need to pick one side, like, oh, I'm part of this party, and I just can't agree with anything else it's just stupid to think that everyone is just a monolith and they only belong in one thing. I think I'm a Republican on certain issues, and I'm a Democrat on certain other issues. And some issues, I have no say. I don't want to have a say, and I'm right there in the middle. I'm like, I don't fucking know. You know,
I just think if you got rid of the labels Democrat or Republican altogether, people would be forced to research and define a position issue by issue. I think somewhere between Obama and Trump, politics became like sports teams.
Yep.
It suddenly became like now you're just all in on your team and you got to support them no matter what. But it's not that way. Like, people forgot that these people are supposed to represent the will of the people, not push an idea on the public.
Yo, what do you guys think of this Vivek dude?
Who?
Carpetbagger. I think he's a carpetbagger. The guy is way beyond. Like, dude, he's not a Republican.
Can you just quickly define who's this guy?
Vivek Ramaswamy. You haven't heard of him? He's running for president. He's gaining some momentum, and he's Indian. And he's conservative. He's kind of like, let's get rid of identity politics. Let's get rid of affirmative action. Let's engage in meritocratic, national identity. He wants to bring back the America First agenda. He wants to get rid of the Department of Education. These are kind of his big policies.
He's placating to what's popular right now. That's what he's doing. All right. I don't see him.
Can you compare? Can you compare the politics of America to the politics in India?
No, because India is not. Well, go ahead.
I could
I'm just trying to get an idea of like how that country.
India is very nuanced in how things are right now. There's Amit, stop the thing, man. I know.
I was about to interrupt you guys because Amit he obviously doesn't give a shit about the conversation.
Have you ever figured out a Rubik's Cube?
He's never finished it.
I can do it right now in 30 seconds if you guys want me to do it.
Well, you've cheated on YouTube. That's
go ahead. No. Go ahead.
Take the stickers off. Is that how you do it? Like,
no, you know what? You guys interrupted me, so I'm just not. I'm not gonna do it.
Good. We didn't really care.
No, it's okay. It's okay. Go ahead.
Indian politics right now. The leader in charge, the party in charge right now, is pretty much a nationalist party. A lot of people accuse it of a lot of things. I personally think that they're pretty centered on things, but it depends on the topic and depends on the issue, right? Where certain things, and that goes for our government too, where there are certain things that, yeah, they're Democrats and they should be espousing a certain type of ideology, but they're not. You know, every politician is still like towing some party line, but there's the other ones in the party that are not towing the party line. So India is not nearly as like, what's the word?
It seems to me from the outside that it would be incredibly dangerous to be at all liberal, or to be at least even be public about it out there.
No, not
in
at
India.
all.
In India,
Yeah.
but India doesn't have liberal and conservative. It's very different, right, Chris? In India, like it's not.
No, we have our liberals and we have our conservatives.
How many like official political parties are there?
A lot. That's the thing. We have a parliamentary system in India, so I shouldn't say we, because technically I'm not an Indian citizen. So they have a parliamentary system where they have multiple parties, so you can choose who you want. They have a communist party. They have a socialist party.
All right. So then, if that's the case, how do they rig it? How do they rig it to make it corrupt and make?
It's definitely rigged, bro. The voting is good.
How do you do that in a multi-party system? When Democrats, Republicans, it's so easy.
The way that you do it is it depends on the level of like control you have over a certain operation. And basically it starts at the very bottom. For us in the US, it starts at the top, right? So which means is that the lower rungs of corruption doesn't necessarily happen as much. Whereas in India, it could be something simple like collecting tolls in a toll booth, where it's like, hey, there's a toll that's $20, but I'll let you go through for $10 as long as you don't say anything and it goes into my pocket, right? So one person lets that happen, two people let it happen, then becomes like a normal thing. Right. And now all of a sudden there's a corruption angle to it. And what happens is his boss finds out, and now the boss is like, hey, give me a cut of your corrupted earnings. Otherwise,
they're raising it to 12.
Otherwise, I won't. So now the guy has to do 12. And then the guy above him figures it out. So he's like, hey, I want 16. You know, I want my cut now.
Right, it's back to 20 in no time.
Then it's back to 20. And
right. So now it's like an entire like.
So let me ask this question. Yeah. Do we think so? Joe Biden got in office in 2021. By 2022, inflation was rampant. Inflation seems to be coming down. This whole bank thing seems like it'll be okay. Do we think he's done enough for the economy by 2024?
Is this a political podcast now?
Well, now it's been an hour. Hold on, it's been an hour. We still have 280 people here. For some reason, they're listening to us talk about this. So, like, maybe the pod is transitioning to more subjects. Right. Do we think Biden's done enough? It still relates to the economy to win with his economic agenda over the past 4 years. Or is inflation just ridiculous?
But like, describe what his economic agenda was the last.
Well, he passed the inflation reduction.
Yeah, IRA is really important. I think you're discounting that a bit too much.
I didn't say anything. I'm just saying that
intonation was implying something. Okay,
my intonation.
In fact, the IRA is what's going to make me and you very wealthy in the next decade.
The Tesla subsidies, the EV stuff is there. What's the other thing he did? I'm forgetting. And
Johnny Boy, who owns all of Enovix and Enphase, he's in the comments here. He's basically going to be living on his yacht in the next decade, I'm sure.
Well, here's the better question: do we think inflation goes down enough for him? Because if inflation is still at 6% in 2024,
it's going down. It's going down.
They're going to figure out a way to get it down. But for the record, like, it's not his fault. That the people that are blaming him for inflation, it's the stupidest thing. Like, we knew this the moment the Fed turned on the money,
and that was during Trump,
in 2020. We knew that this was going to happen. And I don't even see why people even try to pretend like he came into office and tanked the economy. It's like, what did you think was going to happen?
That's not the only thing. Like, that just because we printed the money doesn't necessarily mean that happened. It also was supply chain related too, where goods and services imbalanced, right? Where you had, for the first time, at one point, you told everyone, stop spending your money, hoard your cash. And so everyone hoarded their cash. And then all of a sudden, COVID lockdowns end. Go ahead, everyone, spend your money all at the same time. So, it's one of those things that it's just, the money has to work its way through the system. Like, look at the prices of lumber.
But that wasn't his fault. What I'm saying is
it wasn't
his fault at all.
Yeah.
He just now has to come in and implement a financial policy to help address it. And also, like you said, control the messaging.
If anyone, it was the Fed's fault, because they didn't stop printing. And I think we all knew, I think the last time they did it was January, when they actually just printed another $1 trillion or whatever it was, when they shouldn't have done that. Do you remember?
Yeah.
I think right now everyone should be, and the government needs to start doing this too, which is cutting back on their spend, right? The Republicans need to get off this raising taxes issue, where, guess what? Sometimes you have to raise taxes. Congratulations. Yes, the economy right now can support it. We need to raise taxes. But at the same time, to the Democrats, I would say we need to cut back on some social services and get their people back to work again. So you see, this is where the dichotomy of Republican and Democrat, both of y'all guys need to step off of your platforms and think reasonably how you should run the country. On one side, Democrats, stop being so generous to social services to the point where people don't want to work. And to Republicans, hey, get off the high horse and stop trying to keep taxes so low and keep people super rich. Like, we can afford to pay a little bit higher in taxes. All right. Especially at the higher end of the income bracket, they can definitely afford to pay a little bit more. I'm not saying go crazy with and go 91% taxes, but that's what we need to do.
But right now, those high earners pay more than 50% of all the taxes.
Not necessarily. A lot of them get
more than the bottom, say 80-90%. So you got to look at it. I'm not saying that they can't afford it, but you got to look at it from their point of view. They're saying we're already paying, say, 40% of all the taxes in the country. And from how I understand it, the taxes that we pay are only really going back to pay the interest on the debt from the money borrowed from the Fed anyway. So your money is not actually funding any services. They just borrow that money directly.
Shite.
Huh?
It's not doing shite. Yeah, you're right. The money,
your taxes, when on a local level, it does. On a local level, your property taxes, that goes to a state, from how I understand it. But your federal taxes are not actually funding any.
So Carlos, you think we should go full Reagan, deregulation, reduce taxes completely?
No, we
should go full Mad Max.
No, I think that they do need to regulate, but it has to be the right kind of regulation. I do think this is the environment that crypto was invented for, because I think that the government, as long as they have the ability to control the levers, the money supply, I think it's hard to ask them not to use that power. I'm not saying we should switch over to crypto, but I'm saying as a retail investor, an individual investor, this is one of the reasons why crypto is so powerful, is no one has that lever to it to control sort of the intrinsic value of it and create this sort of situation.
Except the Fed.
But someone posted, I forgot, it might have even been what's his name, Benjamin, something that there is an infinite amount of fiat to buy a finite amount of crypto. I mean, I think that sort of puts it in perspective.
But see, this is also the reason it's good we don't have a crypto-based economy, because imagine something like SIVB happened in a crypto-based bank.
No,
and there's no one to backstop it.
But
there's no one to help, right?
Yeah, but you're talking about that with crypto at a $610 billion market cap. If crypto, say all of crypto was $100 trillion, it's very hard.
It doesn't solve the problem. It doesn't solve the problem. As long as we live in a debt economy, that's what he's pointing out, that they need to keep printing money in order to get out of debt, including the bank bailouts.
But that's part of what
we're not in a gold economy where everyone has a gold bar and we're trading little chips of it off, and that way there is no inflation technically.
Right.
That doesn't exist.
Or the value of the dollar.
I know, but that doesn't exist, and that'll be terrible for all of us. So,
what if there was a crypto bank and you put your crypto in mortgage-backed securities or something, and those still got tanked because of whatever reason, and then you had a
but those are just stupid moves. Regardless of what's backing it, right?
So what I'm saying, if there wasn't a Fed,
you would lose it.
Backstop, then the Roku would lose $478 million tomorrow.
That's it. It would be gone. That's it. There's no way to get it back.
Mm-hmm.
Which is why I think the Fed is important, and everyone who says crypto is the future is
just imagine. You guys think inflation, deflation is bad with fiat? Imagine right now it was with crypto. One time you go to the fucking Kroger and you see a loaf of bread is worth half a Bitcoin, and then you go back 2 weeks later, it's worth 3 Bitcoins. Like, what the hell? And then the week after that, it goes down to a quarter of a Bitcoin.
But that's because of that volatility is because the market cap is insufficient to support that. You know, if you just even if you just look at gold, what's gold at now? 20 trillion. What was the last time we checked the market? It's really hard to move gold a percent or two, because that takes a coordinated effort, right, among several large institutions to be able to move it. It's not where like an individual investor or hedge fund.
All right.
So as an individual,
I was like, to the point where we had nothing to talk about, where we got into gold and politics.
Right.
We really didn't have any topics because SIVB was the only thing. So
okay, next week. What are your predictions? Predictions for next week?
I think we rally next week. I think tomorrow is going to be great.
Because remember, CPI is being reported. A lot of metrics are being reported next week.
Oh shit!
Not tomorrow. I think it's Tuesday morning,
right?
And what is the expectation?
6, I think, or 6 point.
Really?
Yeah, it's 6.
0.4 to 6. That's what people think.
All I know is that.
So then,
I was just gonna say, the only thing I can do is honestly dollar cost average. Into quality.
Listen, I was thinking about this. It's so boring. It's so boring.
I mean, but it's like the truth. All I've been doing is buying high quality companies.
I think there's this idea, especially since 2020, that like investing has to be, I don't know, I think you're guilty a little bit of it, Chris. Like sexy. It has to be almost like a sport where like you call it, you do your research and you call your shot and you make the money and you go back on social media.
Otherwise, we would lose all entertainment value.
Yes, exactly. See, me and Chris understand entertainment. Like,
by the way,
more fun.
we had $1,000 in accounts going, and me and Chris are the only ones who bought stuff, and I think I am up the most at this point. Am I correct, Chris? Because you had puts on something.
Chris, you're muted.
I had puts. I sold them off. I stayed in cash the rest of the time. So
I'm up on my Tesla. I bought Tesla at 150. So I'm still up.
Damn! It was that long ago.
I wish I had bought Meta with that money. But I didn't.
Chris, you still haven't sold your Meta, right? You still have that. Huh?
Yeah.
You still have all your Meta?
Yep, I still have all my Meta.
So what about you guys? When are you buying some stocks in our $1,000 portfolio?
I basically bought $1,000 worth of stock.
I
bought like 9 Tesla shares last week at 189.
Well, you didn't put it in the spreadsheet. We do have a spreadsheet. It's on our.
We still have that shit. Oh,
yeah. You just go in and
I think I'm gonna buy some Palantir. I think I might just do that. Just
buy some puts on Palantir. I think we'll make some money.
All right.
No, if you watch the video, I was saying at that time I was looking at it because I was looking at the chart. I was like, man, you look at the chart, you look at the stock price and the RSI. Like, if you want to start a position in Palantir, like if you get past any of the issues that I have with it personally, this is, I think, the time that is start building. Now, I'm not saying you back the truck up, but
here's the question: Zuck is going after Twitter. Is he going to build a Twitter competitor?
I hope he does.
Right?
We should have talked about this. We can talk about this for a little bit. Yeah.
Now, what do you think about
kind
that?
Of what the Facebook feed is now, anyway.
No, it's not. No, it's not.
No. Hold on. Stop, Carlos. That is the exact thing that I was thinking too. I was like, what the fuck would be the difference?
No, it's not. No, it's not.
It's a mix of news and some stuff from people
it's not.
that or follow.
Twitter is a product because of how fast and how I type a status, it takes like 5 minutes to post. Like, it's not the same. The product they've created at Twitter is this unique public square that it feels different than your family status and updates.
It does.
You don't follow people on Facebook.
I think it's because on Facebook, like, there's all this personal data of the person. On Twitter, It's like a blurb, right? But if you got rid of, think about it, if you got rid of all that stuff, like all the photos, all the extra crap on your Facebook feed, and people were just what they posted and what they replied, that's essentially Twitter.
Yes.
And also, I think the only difference is Facebook, you follow, like, you're going to see your feed with your friends, a lot of them, versus like Discovery, right? Whereas Twitter, you're going to be just able to discover people, other things that are reposting and everything else. With Facebook, I don't necessarily see that. I see a lot of like my own friends, right? I think
Zuck should call the tweets. He should call the tweets Zucks. Every time you tweet, you zucked something. Like that would be
no way.
That would be that would be the most narcissistic shit ever. But it would be.
And
legit.
to think I invested $10,000 in this guy's ideas.
It's not an idea; it's an admit. You posted it. No, but do you think if they made a separate app, Facebook is
if Facebook was going to make one app separate, it should be Facebook Marketplace, and I would invest in that company. Facebook Marketplace.
It wouldn't be a separate company; it's just going to be a separate app.
Yeah,
just make it. App. I'm saying if they had to separate it, that would be my vote. It's
no, but if they had a Twitter app competitor, they have 2 billion DAUs. They just crossed that, by the way, this month. You don't think they get 100, 200 million of them to check?
They could easily have over 300 million people. Easily over 300 million people on that.
And that's more than Twitter's user base. Twitter
that's
barely
exactly
gets 250. Right. It's and now the only thing is there's gonna be a lot more censorship because you don't have Elon Musk running, so there's gonna be a lot of censorship. But in terms of a new opportunity to post content, I don't know if it's a bad idea at all.
How do you personally? I'd love to get your take on that. How do you guys personally feel about that? About the fact that, like you just said, like it's a fact. Facebook, if they did a Twitter, would be heavily censored. How do you personally feel?
I mean, it sucks. I personally
I'm on YouTube. We're all on YouTube.
No, I know that we still use it. There's always that you deal with it. But I'm saying, how do you personally feel about that?
I don't like it, but nonetheless, I can't control that shit, so I'm going to use it. You know, it's like if it gets me attention, if it gets me more users for my startup, if it gets me more followers, like I don't care. Like I won't say some crazy shit. And crazy is subjective. I get it, which sucks. Which is why I'm happy Elon bought Twitter because it's actually true free speech. But I don't know if you guys know this. The shit I'm seeing in my Twitter feed, I'm seeing people get shot in the face on Twitter. Like the types of videos that are popping up. Chris, you agree with it, right?
So I have seen porn on Twitter. Like it's crazy. Like you put in anything, like a random.
He's like, I typed boobs.
Elon has
all of a sudden, he's like, I was looking for BOOB stock.
No, dude, no.
They just like perverts over there.
I was looking. So I was doing some research on a company. I don't know.
He was doing research on Dirty Sanchez.
It's Fat Company. Have you guys ever been to like a restaurant called Twin Peaks?
No. Yes,
right?
I've heard of it.
Yeah. It's like a Hooters, right? So I put in Twin Peaks, and bro, I got Twin Peaks on Twitter, like a lot of Twin Peaks.
I do follow that big boob stock investing account.
Yo, the amount of boobs Carlos sends us in the WhatsApp group.
It's all not true. It's always Vitaly. Listen, really, between the two of us, I'm the one starting that.
All I'm saying is the Twitter feed, anything goes now because there's no fucking moderation.
Dude, there are finance YouTubers who use their sexuality. Like, bro, I'm not even listening to your stock picks anymore at this point.
Have you seen all the shorts? Oh my god, my shorts are polluted with just.
We'd be on the thumbnail the whole time, every time.
Yeah.
Yo, I wish we had a girl on this show, bro. Like a real girl who could talk stocks. That'd be so fun. Like. Just to have another personality that's not a guy.
If only there was someone. If only there was
someone with a K.
I don't think she wants to talk stocks though, so that wouldn't be. We need like an actual person that really wants to talk stocks. But who knows? If you're in the chat, let us know. We could be on a guest episode one day. We just talk.
Right. It could be a sandwich, freelancer finance on one side.
Oh my God.
Bro, we're a walking, talking HR issue, bro. You don't want that, man. We'll be canceled
right,
so
but it's
fast.
me with the boobs.
So basically, Carlos would cancel first, Vitaly second, me third, and Amit.
And then Amit's hanging out by himself, screaming at the mic with it getting cut off all the time.
Okay. Well, Futbucker has a nice red wig. I bet he has a nice butt too.
Yo, I can't believe 270 people. So thank you guys for staying for so long. I don't know if you're new to this. Everyone's links are in the description. Please follow me on Twitter. Follow Chris on Twitter, and then Freelance Finance, their YouTube channel.
Freelancer Finance, dude. It's time you just say it right.
I don't know why you guys picked this name. Yeah, why don't you call it Carlos and Vitaly? Why don't you just call it?
That's not a bad thing. Maybe we should change it at this point.
Guys, you should really change the name because remember the first time
I'm retired.
I want to remind you that half of our channel name is in the name of this podcast. It's like
but freelancer is like like when you guys emailed me in March 2022 and I got an email from freelancer finance official at Gmail. Yeah. And I'm like, what the fuck is this?
It sounds like we're selling something.
The original genesis of our whole thing was like, we're both freelancers. We don't have steady income. There's a lot of people like us, right, who want to invest, but they don't have steady income. So how do you manage that? How do you manage like
it makes sense.
And it was a
just a bad name. It makes sense. It's just a bad name. That's all.
What if I said that about your name, Amit? What if I said, you know what? I know why your parents called you
Kukreja?
Amit, but it's a
What kind of
bad
is that?
name.
It's unique. No, it's unique. How many
Like, why
other
would your
Amit
parents do
Kukrejas do
that
you
to
see? No, but see, one of the things about Amit that makes sense is that his name is so unique that when you type it, there's no other Amit Kukrejas. All you see is him with his stupid thumbnail faces.
It is true. You're unique.
Yeah.
And you hit the sweet spot. I think the sweet spot for a first name is 4 letters.
Yeah. Did his face freeze?
He's frozen right now. He's doing a thumbnail right now.
Oh, look, he's stuck in a thumbnail.
Oh, no, he's back. He's back. He's back.
Oh no, in real life, he
Chris
got
was stuck
in a
on the
thumbnail.
just made.
All right.
That is so
Chris was
funny.
stuck on this face. It was hilarious. Hold on. It's gonna load.
can't
You were
see that.
stuck.
He's frozen again, dude.
Yeah, he just froze.
That is so funny.
All right, everybody. Till next week.
Yep.
Out. See you next week.
Yeah.
Bye-bye.
Later, guys.
Later.
Take care.
Bye.